Have you ever looked at a new bridge, a high-speed rail line, or a massive wind farm and thought, wow, someone's making a lot of money from that? Well, you're not wrong. And today, we're going to talk about how that someone could be you. Welcome to our deep dive into infrastructure investing and how you can profit from the global rebuild. So, what exactly is infrastructure? It's not just roads and bridges. Think bigger. It's the essential framework of our society, the power grids that light up our homes, the water systems that keep us hydrated, the data centers that power the internet, and the airports that connect the world. These are the long-lasting, vital assets that we all depend on every single day. Now, why is this such a hot topic for investors right now? Two massive forces are at play. First, a lot of the infrastructure in developed countries like the United States and Europe is old. Seriously old. Some of it dates back over half a century. It's aging, it's crumbling, and it desperately needs to be upgraded or replaced. This isn't just a testo-have, it's a necessity. Governments are recognizing this and are starting to pour trillions of dollars into modernization projects. This creates a once-in-a-generation investment opportunity. Second, in emerging economies across Asia, Africa, and Latin America, the story is about growth. As their populations grow and their economies expand, they need to build new infrastructure from the ground up. New cities need new power plants, new ports, and new communication networks. This explosive growth requires massive capital investment, and that's where private investors come in. Combine these two trends, the fix-it wave in the developed world and the build-it wave in the developing world, and you get what we're recalling the global rebuild. This isn't a short-term trend. It's a multi-decade megatrend that will reshape our world. So, what makes infrastructure such an attractive investment? Let's break down the key benefits. First, stability and predictable cash flows. Think about a toll road or a utility company. People need to use these services regardless of what the stock market is doing. This means infrastructure assets often generate steady, reliable income, much like a rental property, but on a much larger scale. This income often comes from long-term contracts, sometimes lasting 20 or 30 years, which adds another layer of security. Second, inflation protection. This is a big one. Many infrastructure contracts have built-in clauses that allow them to raise prices in line with inflation. So, when the cost of everything else goes up, the revenue from your infrastructure investment can go up too, helping to protect the purchasing power of your money. In a world where we're all worried about inflation, this is a hugely powerful feature. Third, diversification. Infrastructure assets often behave differently from traditional stocks and bonds. When the stock market is volatile, infrastructure can provide a stabilizing force in your portfolio because these are essential services. Their performance is less tied to the ups and downs of the economic cycle. This low correlation can help smooth out your overall returns and reduce risk. And finally, there's the potential for long-term capital appreciation. As you invest in building or upgrading these vital assets, their value can grow over time. You're not just collecting a paycheck, you're owning a piece of a real, tangible asset that's becoming more valuable. Okay, that all sounds great. But how does an everyday person like you or me actually invest in a giant wind farm or a new airport terminal? You don't need a billion-dollar checkbook. There are several accessible ways to get started. Let's start with the most direct route: infrastructure stocks. You can buy shares in individual companies that own and operate infrastructure assets. Think about utility companies, pipeline operators, or cell tower owners. These are often publicly traded blue-chip companies with long histories of paying dividends. The advantage here is you have control over which specific companies you invest in. The downside, you need to do your homework on each company, and you might not get as much diversification as you'd like. Next up, a much more popular option: infrastructure ETFs and mutual funds. But ETF stands for Exchange Traded Fund. These are funds that hold a basket of dozens or even hundreds of different infrastructure stocks. When you buy a share of an infrastructure ETF, you're instantly diversified across a wide range of companies, sectors, and even countries. This is a fantastic way to get broad exposure without having to pick individual winners. It's simple, low cost, and you can buy and sell them just like a regular stock. Then we have what are known as listed infrastructure companies, or LIT. These are companies whose entire business is owning a portfolio of different infrastructure assets. Think of them as a specialized investment firm that you can buy shares in. They often invest in a mix of public and private projects, giving you access to opportunities you couldn't get on your own. For those looking for something a bit more specialized, there are real estate investment trusts, or REITs, that focus on infrastructure. For example, there are REITs that exclusively own data centers or communication towers. These can be a great way to target a specific high-growth niche within the broader infrastructure space. Now, let's talk about some of the exciting sectors within infrastructure. It's not all just concrete and steel anymore. Digital infrastructure is booming. This includes data centers, fiber optic networks, and 5G cell towers. Our world is becoming more and more digital, and all that data needs to be stored, managed, and transmitted. This is a huge growth area. Another one is the green energy transition. The shift away from fossil fuels to renewable energy sources like wind, solar, and hydropower requires a complete overhaul of our energy infrastructure. This involves building new power generation facilities, upgrading the electrical grid to handle these new sources, and developing energy storage solutions like massive batteries. Investing in companies at the forefront of this transition could be incredibly lucrative. And let's not forget about transportation. We're talking about more than just roads. Think modernized airports, high-speed rail projects, and smart shipping ports that use technology to become more efficient. As global trade and travel rebound, these assets become more critical and more valuable. Of course, no investment is without risk, and it's important to be aware of them. Infrastructure projects can face political and regulatory hurdles. A change in government or new regulations can impact a project's profitability. They also require huge amounts of capital, so rising interest rates can make financing more expensive. And large-scale construction projects can face delays and cost overruns. That SY diversification through funds like ETFs is so important. It helps to spread out these risks so that one problem project does unsink your entire investment. So, how do you get started? First, do your own research. Look up some of the top global infrastructure ETFs, like those from iShares, Global X, or SP. Read their fact sheets to see what kind of companies they hold and in which countries. Second, consider your own risk tolerance and investment goals. Are you looking for steady income, long-term growth, or a bit of both? This will help you choose the right type of investment. And third, start small. You don't have to go all in at once. You can begin by adding a small allocation to infrastructure in your portfolio and gradually increase it over time. Infrastructure investing is about playing the long game. It's about investing in the essential building blocks of our future. By tapping into the global rebuild, you're not just investing in stocks, you're investing in progress, in modernization, and in the tangible assets that will power our world for decades to come. It's a powerful way to build wealth while owning a piece of the future. Thanks for watching today. I hope this gave you a solid introduction to the world of infrastructure investing. If you found this video helpful, be sure to hit that like button and subscribe for more content on how to invest smarter. Let me know in the comments if you're already investing in infrastructure or what questions you have. See you in the next video.